Hey everyone, welcome to Tesla Daily. Today is March 13th, 2026, and we've got a lot to cover. First up, let's talk about Tesla's latest software update. It's always exciting to see what new features and improvements they've rolled out. Then, we'll dive into the expansion of Tesla's charging network. This is crucial for making electric vehicles more accessible to everyone. We also have some great news from China, where Tesla's sales are surging. It's fantastic to see such strong demand in one of the largest markets for EVs. And we can't forget about Elon Musk's ambitious lunar vision. It's bold, and it shows how Tesla is thinking big about the future. On top of that, Tesla is making strides in the UK energy market. This move could really shake things up and provide new opportunities for us. Before we wrap up, let's take a quick look at the stock. So stick around. We've got a lot of exciting updates ahead. Let's take a moment for a quick stock update. Tesla wrapped up trading at $391.14 yesterday, which is a dip of about 2.01%. Now, while it's never fun to see a drop, we know the market can be unpredictable. It's all part of the journey. Let's keep our eyes on the bigger picture and see how things unfold in the coming days. We are witnessing a significant surge in Tesla's sales in China, with the company reporting a remarkable 35% increase in deliveries during January and February 2026. According to the China Passenger Car Association, CPCA, Tesla sold 127,728 vehicles made in its Shanghai Gigafactory, up from 93,926 units during the same period last year. This growth comes despite the fierce competition from local rival BYD, which saw a staggering 36% decline in its deliveries over the same time frame. The Shanghai Gigafactory plays a crucial role in Tesla's operations, producing the popular Model 3 and Model Y for both domestic and international markets. While Tesla's sales figures are impressive, they still trail behind BYD, which became the world's largest electric vehicle seller in 2025. Nonetheless, Tesla's recent performance indicates a robust demand for its vehicles, especially as it continues to expand its reach in Europe and other regions. Despite the positive sales data, the competitive landscape remains challenging. Analysts are keenly observing the upcoming sales figures for March, which are expected to provide a clearer picture of whether Tesla can maintain its growth trajectory. The CPCA has noted that the post-Lunar New Year period is critical for new product launches, and many manufacturers are gearing up to introduce new models that could further intensify competition. Moreover, BYD has recently unveiled its new Blade battery technology, which has garnered attention for its rapid charging capabilities, potentially giving it an edge in the market. As Leon Cheng, head of the mobility practice at YCP, pointed out, BYD's hedge is exports. The company's overseas sales crossed 1 million units in 2025 for the first time, a buffer purely domestic rivals can't match. In summary, while Tesla's sales growth in China is a positive indicator of its market strength, the ongoing competition from BYD and other emerging automakers poses a significant challenge. As we look ahead, the landscape will likely continue to evolve rapidly, making it essential for Tesla to innovate and adapt to maintain its position in the market. Next up, another key development. In a concerning turn of events, Tesla reported a 9% year-over-year decline in vehicle deliveries for 2025, totaling 1.64 million units. This downturn is compounded by a staggering 47% drop in net income, raising alarms among investors and analysts alike. The prediction markets now indicate a 78.5% probability that Tesla will deliver fewer than 350,000 vehicles in Q1 2026, marking a potential third consecutive annual decline. The competitive landscape has intensified, particularly with the emergence of BYD, which dethroned Tesla as the world's largest EV seller in 2025, delivering 2.26 million vehicles, an impressive 28% increase from the previous year. In contrast, Tesla's struggles are evident, as discussions on platforms like Reddit highlight fears of a prolonged delivery slide. And here's the next update you should know. In a significant move to improve user experience, Tesla has rolled out its latest software update, version 2026.8, which introduces the new comfort braking feature exclusively for the Model Y. This feature aims to provide a smoother braking experience, enhancing comfort during routine stops. According to Tesla's release notes, your Tesla now provides a smoother feel as you come to a complete stop during routine braking. While the need for this update may not have been widely recognized, given that many owners reported no issues with the existing braking system, it's a testament to Tesla's commitment to continuous improvement through over-the-air OTA updates. Additionally, the update enhances the user experience for Tesla owners by introducing a more seamless navigation feature for Spotify, allowing users to jump directly to the bottom of their playlists. Cybertruck owners will also benefit from a new blind spot warning while parked feature, which prevents door openings when an object is detected in the blind spot, enhancing safety. Tesla has established itself as a leader in OTA updates, allowing for real-time improvements and new features without requiring a visit to a service center. This capability not only enhances customer satisfaction, but also positions Tesla as a software-as-a-service, SaaS provider in the automotive industry. As we look to the future, the integration of advanced features like comfort braking and the continuous rollout of software updates signify Tesla's shift towards a more software-centric business model. This aligns with our long-term outlook, where software enhancements could become a primary revenue stream, complementing vehicle sales. In summary, while the immediate impact of the comfort braking feature may be subtle, it reflects Tesla's proactive approach to user comfort and safety, reinforcing its innovative reputation in the automotive sector. We are excited to see how these updates will further enhance the driving experience for Tesla owners around the globe. Next up, another key development. In the ever-evolving landscape of electric vehicles, EVs, and autonomous driving, Tesla finds itself at a pivotal crossroads. While we have long been the frontrunner in the EV market, recent developments indicate that our leadership is being challenged by a wave of competitors, particularly from China and established brands like Lucid and Rivian. Chinese automaker Zeekr has unveiled its 7X model, which has been described as superb in almost all areas. This vehicle boasts a 100 kilowatt-hour battery, producing 475 kilowatts and 710 newton-meters of torque, allowing it to reach 62 miles per hour in just 3.8 seconds. With a price range of $40,000 to $51,000, the Zeekr 7X is positioned to attract buyers looking for premium features without the premium price. In a bold move that could redefine the automotive landscape, Tesla has begun production of its Cybercab, a vehicle designed to operate exclusively on its full self-driving FSD software. This revolutionary car, which lacks traditional controls like a steering wheel and pedals, is set to be mass-produced starting in April. Elon Musk envisions the Cybercab as a cornerstone of a driverless ride-hailing service, potentially priced below $30,000. However, this ambitious plan faces significant hurdles, particularly regulatory approval from the National Highway Traffic Safety Administration, NHTSA, which has yet to receive Tesla's exemption application necessary for the Cybercab sale. Musk has stated there's no fallback mechanism here, highlighting the high stakes involved in this transition. The company has already canceled two. Now let's shift to the next story. In a surprising turn of events, Elon Musk has acknowledged that his artificial intelligence venture, xAI, was not built right first time around and is undergoing a significant overhaul. This admission comes just weeks after Tesla invested $2 billion into xAI, which was subsequently merged with SpaceX, valuing the combined entity at a staggering $1.25 trillion. The timing raises eyebrows, particularly as Musk now faces a leadership crisis with 10 out of the original 12 co-founders having departed the company. The exodus began in earnest earlier this year, with key figures such as Jimmy Ba and Tony Wu resigning amid reported tensions over performance demands. Musk's comments reflect a broader concern about the internal dynamics at xAI, which has seen, now let's shift to the next story. Tesla is making strides in enhancing its electric vehicle EV infrastructure, with plans to install a new supercharger hub featuring up to 48 charging stalls in Romulus, Michigan, close to the Detroit airport. This addition is part of a broader strategy to combat range anxiety among EV users and support the growing demand for electric vehicles in urban areas. With this new hub, the total number of fast chargers in the Detroit metro area will rise to approximately 88, following the installation of 40 chargers announced last November. The city of Detroit is actively supporting this initiative through its Charge Ahead program, aimed at establishing a network of fast chargers every 3 to 5 miles throughout the city. As the program states, it seeks to ensure accessibility and convenience for all residents and visitors, while solidifying Detroit's leadership in the automotive industry's shift towards electrification. In the broader context, the expansion of public EV charging infrastructure is crucial, as it directly correlates with increased EV adoption. Recent trends indicate that new EV sales in the U.S. have declined, particularly following the removal of federal EV incentives. However, the installation of new charging stations is expected to mitigate these challenges by providing more options for drivers, thereby potentially reversing the sales downturn. Moreover, Tesla's efforts are not limited to Michigan. In Canada, the Tesla Model Y rear-wheel drive (RWD) has become eligible for a $5,000 rebate under the new Electric Vehicle Affordability Program, EVAP. This makes the Model Y available for under $45,000, significantly enhancing its competitiveness in the Canadian market. The EVAP program aims to encourage the adoption of affordable EVs, and with the Model Y now qualifying, Tesla could see a boost in sales in Canada, which have been impacted by previous tariff challenges. As we look ahead, the combination of expanding charging infrastructure and new affordability programs positions Tesla favorably in both the US and Canadian markets. The company's commitment to reducing range anxiety through strategic charger placements and enhancing vehicle affordability through rebates could lead to a resurgence in EV sales, benefiting both Tesla and the broader transition to electric mobility. Now let's shift to the next story. In a surprising shift, Elon Musk has announced that SpaceX's near-term priority is no longer Mars, but rather the establishment of a self-growing city on the moon. Musk stated, "The overriding priority is securing the future of civilization, and the moon is faster." This change in focus is driven by the moon's accessibility, with launch windows opening every 10 days, compared to Mars, which only aligns with Earth every 26 months. The journey to the moon takes just 2 days, allowing for rapid testing of life support systems and habitats. Musk's vision aligns with NASA's Artemis program, which aims to return humans to the moon and establish a sustainable presence there. NASA has already contracted SpaceX for lunar lander missions, with a budget of approximately $2.9 billion. This partnership positions SpaceX at the forefront of lunar exploration, potentially paving the way for a permanent human settlement. However, the environmental implications of launching heavy rockets to build a moon city cannot be overlooked. A recent study highlighted that rocket emissions could conflict with global net zero goals, as they contribute to atmospheric warming and ozone depletion. Yet, Musk envisions the moon as a testing ground for extreme sustainability practices, where resources must be utilized with near-perfect efficiency. The development of a lunar city could serve as a laboratory for innovations in closed-loop agriculture, advanced recycling, and solar energy storage, which may eventually benefit life on Earth. As Musk integrates his AI startup xAI into SpaceX, we can expect advancements in space-based data centers powered by solar energy, further intertwining technology and sustainability. In the long term, while the ambition to colonize the moon presents significant challenges, it also offers a unique opportunity to advance technologies that could help mitigate climate change on Earth. As we look ahead, the success of this lunar endeavor could redefine our approach to sustainability and resource management, both on our planet and beyond. Next up, another key development. In a significant development for Tesla, the company has received regulatory approval from the UK's energy watchdog, Ofgem, to supply electricity to households and businesses. This marks Tesla's first foray into the energy supply market outside the United States, following its existing operations in Texas. The approval comes after a 7-month review process, demonstrating the company's commitment to expanding its energy services amid a global energy crisis that is driving up household bills. Tesla Energy Ventures, which has been operating in the renewable energy sector since 2020, will now be able to directly supply electricity to UK consumers. A spokesperson from Ovgen stated, "Protecting consumers and maintaining a secure, fair energy market underpins every licensing decision we make," highlighting the regulatory body's focus on consumer welfare. This move is particularly noteworthy as Tesla faces a downturn in its vehicle sales, which have seen a global decline. The company's recent share price performance reflects this struggle, with a 30-day return of just 8.66% and a 90-day return of 14.76%. However, the longer-term outlook remains more optimistic, with a 1-year total shareholder return of 56.49% and a 3-year total return of 117.18%. The entry into the UK energy market could provide Tesla with a new revenue stream, diversifying its business beyond electric vehicles and into energy supply. Analysts suggest that this pivot, along with ongoing developments in AI and robotics, positions Tesla as more than just an automaker. It is evolving into a comprehensive technology company. Despite the immediate challenges in vehicle sales, the potential for growth in the energy sector could redefine Tesla's valuation. Currently, the stock trades at approximately $391.20, which some analysts deem undervalued, compared to a fair value estimate of $588.18. However, caution is advised as mixed signals regarding future cash flows and market expectations persist. In conclusion, while Tesla navigates through a challenging period in vehicle sales, its expansion into the UK energy market represents a strategic move that could bolster its long-term growth and stability. As we look ahead, the success of this venture will depend on Tesla's ability to execute its plans effectively while managing the complexities of regulatory approvals and capital investments. Now let's shift to the next story. In recent weeks, Tesla has found itself embroiled in multiple legal challenges and safety incidents that highlight growing concerns over its autopilot technology. A Houston driver, Justine St. Amour, has filed a lawsuit after her Cybertruck allegedly malfunctioned while in autopilot mode, veering dangerously close to an overpass. The incident, which occurred on August 18, 2025, resulted in serious injuries for St. Amour, particularly affecting her shoulder, neck, and back. Her attorney, Bob Hilliard, criticized Tesla's marketing of its full self-driving FSD package, stating, "This company wants drivers to believe and trust their life on a lie, that the vehicle can self-drive and that it can do so safely. It can't and it doesn't." This lawsuit is part of a Next Up, another key development. In a significant move for Tesla and its CEO, Elon Musk, the newly launched X-Money debit card has been spotted in action, showcasing the potential for a new financial ecosystem linked to Tesla's operations. A user named Josh Wood recently shared a video on social media platform X, demonstrating a transaction made with the metal debit card at a gas station, which he recorded for posterity. This transaction not only highlights the card's functionality, but also signifies a growing interest in Musk's financial initiatives. The X-Money service aims to integrate seamlessly with Tesla's existing ecosystem, potentially allowing users to manage payments for Tesla vehicles and services more efficiently. As Musk continues to innovate across various sectors, That's a wrap for today, everyone. Thank you for tuning in to Tesla Daily Insights. We appreciate your support and enthusiasm. We'll catch up again in the next update. Until then, take care.